man. Get your tux on. We got a situation.
My name's Daniel. I'm a capital markets lawyer, which means I help people fill out forms so they can raise a bunch of money. Well, not exactly people, but people acting on behalf of corporations. A corporate lawyer. Fun times. You know, when I go to parties and people ask me what I do, I tell them I'm a lawyer and their eyes just light up thinking about suits or something. And then I tell them all I do is push paper around for rich people, and the disappointment returns in their eyes. It's beautiful. I mean, I can package it in a way where, you know, I work on billion-dollar deals for the largest companies in the world. But that's kind of like saying a YouTuber is a CEO of an independent production company that partners with multi-billion-dollar media companies. Technically true, but a bit misleading. At the end of the day, I'm just rambling in front of a camera here and doing fancy paperwork out there.
Or I'll pay someone else your money to do it for me.
But I want to explain exactly what capital markets or securities lawyers do and give an overview of everything I've learned so far in the industry. It's going to be very high level, very general, but not legal advice, not financial advice or life advice, not any kind of advice. You don't want to get advice from me, okay? So what are capital markets? Let's say you have a great idea. Maybe you invented an app that reminds you to keep eye contact in conversation so people don't think you're weird. Or maybe you run a government and need money to build a very large highway. You have aspirations, but what you don't have is money. So you go to the capital markets, which are basically a giant, highly regulated matchmaking service where companies and governments sell little pieces of themselves. Sad, but these are stocks and bonds to investors who have more money than they know what to do with. If all goes well, you get the cash now. And investors get some cash back and some more cash on top of it later on. It's an investment. Either this happens because, you know, your company thrives and you can pay back the bonds, the IOUs, or someone else is willing to buy those little pieces of the company that you sold, stocks, for more than they paid. If all does not go well, your company flops, investors lose the money, and a few years later, someone writes a book about you and WeWork files a Chapter 11 bankruptcy or something. I don't know. Either way, lawyers get paid.
I received confirmation of a wire transfer from escrow indicating payment in full.
Cash rules everything around me. Cream, get the money, dollar bill, y'all. Capital markets, if you break it down, they come in two flavors. The equity markets, stocks, where companies sell ownership slices known as shares in exchange for cash. And the debt markets, the bonds, where companies or governments sell IOUs that promise to pay back money later with interest on top. And you can also have primary markets and secondary markets. Primary is where new securities, the stocks or bonds, are sold for the first time, like an IPO or an initial public offering, which is basically a very expensive debut single for a company. And you have secondary markets where existing securities trade hands. Securities, remember, are stocks and bonds. These are things like the stock market, where people buy and sell shares based on, I don't know, who tweeted what that day. Here, you're not getting it directly from the company. It's someone else who bought it, maybe directly from the company or somebody else, and you're getting that secondhand. It's all very exciting, sometimes terrifying, always complicated, and that's where lawyers come in.
Enjoy your evening, Donald.
I like to think of capital markets as a playground with rules. They're a very heavily refereed sport where referees, the regulators, the government institutions, occasionally change rules in the middle of the game. Here are the main players, the enforcers, the writers of the rules. First, the SEC, Securities and Exchange Commission.
What does the SEC have to do with climate, and why?
The most important innovations in our capital markets came along during the Great Depression, when we began requiring public disclosure of important information from companies that wanted to raise money from us. The basic bargain is this: investors get to decide what risks they wish to take. Companies now, that are raising money from us, have an obligation to share information with investors on a regular basis. Now, the first disclosures, those revolved around companies' financial performance. They were
established in the US after the Great Depression, when people realized that maybe stock market fraud was bad. They essentially review offering documents, write rules, and sue people who commit securities fraud. FINRA, the financial industry, Regulatory authority. Don't ask me why they added the N in an acronym, but they oversee broker-dealers like investment banks. They make sure underwriters aren't overcharging issuers, and they regulate research analysts and prevent them from hyping stocks that, they secretly think are awful. We'll get into the main players a bit more later. But moving on to other laws, there's state laws or blue sky laws. Every state in the US has its own security laws, but most big deals avoid them through federal preemption, meaning the federal laws come out on top. So who cares about these state laws? But if you're doing private placements, you may need to file paperwork in multiple states. Lawyers handle this, junior associates suffer through this. Cycle continues. Sarbanes-Oxley, or SOX, it was passed after Enron and WorldCom, and it made it much harder for executives to pretend that their companies were fine when they really weren't. It requires CEOs to personally certify financial statements, which really makes them nervous. Dodd-Frank's, that was passed after the 2008 financial crisis, mostly affects banks. It includes other sub-rules like the Volcker Rule, and it basically tells banks, hey, maybe don't gamble with depositor money. The Jobs Act. The Jobs Act, it makes it easier for startups to go public by letting them skip some regulatory requirements and file IPO, initial public offering, paperwork confidentially. So if they, change their mind midway, nobody knows. And it also made it legal to advertise private investment deals, which led to many interesting scams. Now, stock exchanges have their own rule books, like requiring certain corporate governance standards for listing companies. They have a huge manual, very boring stuff. You also might come across the CFTC, the Commodities and Futures Trading Commissions. This is for derivative products, and it's more peripheral to capital markets lawyers, unless you deal specifically with swaps and stuff like that. Okay, as you might see, there's a lot of rules and too many to keep track of. It's like one of those complicated parking signs. It'd be really great if somebody could just give you an answer, or better yet, just park your car for you. And that guy is the lawyer.
You gave him up to save your own ass.
That's a lie.
Doesn't matter, they'll think it anyway. But hey, that's just one man's opinion.
When you're doing capital markets deals, lawyers aren't the main character. They're the annoying side characters, always saying we can't do that to the main characters, and they usually get killed off because nobody likes them. The main character of the capital markets deals are probably the issuer, the companies themselves, or governments in some cases that need the money and are raising the money, and they're the ones issuing the securities. They want this to be as quick and painless as possible, but it never is. And every story needs a little drama, The underwriters are another major character. The investment banks, the Wall Street firms, the Goldmans, the Morgans, and the Stanleys, and how have you. They help issuers sell securities. They price the deal, they find buyers, they often guarantee the issuer a certain amount of money, and they charge fees for this because, of course, they do. And you have the investors, the people with the money. Some are giant institutions, the hedge funds, the pension funds, the mutual funds. Some people are just regular people, the retail buyers. They hope to buy low and sell high. In my case, I just buy high. Finally, we have the regulators, the referees. We mentioned some, like the SEC, the Securities Exchange Commission in the US, major player. They make sure that everything is fair-ish. Also, FINRA, we mentioned that they police brokers, and you have state regulators, and they bring their own flavor of bureaucracy, which is always a joy.
Nothing's wrong. I need a glass of water.
What the hell is going on?
Now again, lawyers are the ones who make sure all the characters play by the rules. They draft disclosure documents, basically a very long explanation of why you should trust the issuer or the company with your money. They review financial statements, along with the auditors. We'll get into more detail there. And they ensure that essentially no one goes to jail. The system works most of the time. Now, capital markets are where companies go to raise money, where investors go to try to make money, and where lawyers go to make sure it's all done in a legal way. The whole system is a balancing act. It makes it easy enough to raise capital so companies can grow, but not so easy that investors get scammed.
So I'm going to give you the benefit of the doubt that you didn't know.
But as long as you tell people honestly about what they're buying, be transparent, disclose, the regulators are apparently okay with it. So lawyers are all about telling investors about the company that they're buying. Of course, the lawyers also do some other stuff like drafting deal documents according to the rules, the business decisions, and solving whatever other problems that come up. Like, I don't know, the company CEO posting stupid stuff on Twitter or X, and smoking pot on Joe Rogan's podcast.
Civil liability associated with agency is based on several factors,
including the deviation of the agent from his path,